Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy St. Patrick's Day. Welcome to PreMarket Prep. Spencer Isreal, Joel Elconin, and Dennis O. Dick with you this morning. We got a busy show today. A lot to talk about. We got the fact that everything is pretty much down this morning. We got a lot of news overnight. We got some accounting issues. We got some EV news. We got a Fed meeting today. My hat's falling off. We got a Fed meeting today that I want to talk about. We'll preview with our guests. We got a lot to discuss. A lot going on. Two guests on the docket today. First up at 8:35, Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. He would join the show from the floor of the New York Stock Exchange at 8:35. And then at 9, I'm bringing on one of our team members here, John Gobronson. We call him John G. He is a crypto nut, and he's going to explain to us, Dennis and Joel, the NFT thing and the Ethereum network and how all that works. Because we were fumbling around the other day. And I said, John G knows what he's talking about. He's in the space, so we're gonna get John G on. He'll explain that stuff to us. That'll be at 9 o'clock. Don't forget to hit that like button, please. Hit the like button, everyone watching on YouTube, Facebook, Twitch, Twitter, wherever you're watching this show. Thank you very much. Let's throw it to Joel now. Joel, I already said we're down, but tell us how
we're down, man. I don't know if that's triple D out there, but there's a step down seller in the S&P 500 futures, and they have had their foot on the gas since 7 a.m. this morning. We were at 52.75. We lost almost 20 handles here. Just lower highs. We are through yesterday's low. Pre-market high, 39.60 and a quarter. We ain't going to see that, folks. We're traded just off the pre-market low. I'm not seeing much down here. Maybe 39.13 was Monday's low. Crude, that continues to head lower. That's down 53 cents at 64.27. Gold, that's down. Everything's down. Gold's down 370 at 17.27.40. Silver's down 9.3 cents at 25.91. And Bitcoin just hanging out here in the 55,000 handle. It's down. Let's call it $900 at 55K. Triple D with the smart text last night. I wish I would load it up on the short side. You had a good feeling last night. We were going to be weak today.
I did, and I'm getting punished for it. Unbelievably, I put a few Kathy stocks long against a pile of Qs short. Came in way short overnight. And I'm down money because the Kathy stocks are hammered. And I mean, I got stocks that are down 6% and the Qs are down 1%. That's not, the way to make money. So I bought it. This market is so finicky. It attacks certain areas and attacks the growth so hard. I've got to reevaluate my hedging tactics to these new markets because I went heavy short Qs. I'm like, okay, I think tech's going to get hit. So I'm going to go twice as heavy Qs. You had to go 3 times as many Qs. You had to go like 3-to-1 on your hedges because Qs are down 1%. And I would say, you bring up Roku, it's down only 2.5. It's actually doing better than some of the other ones. But there's some smaller ones that are down 4, 5, 6% here. Tesla down 3%. It's hard to find a tech stock that is only down 1.1%. So, I mean, even if you look at Apple's down 1.5. I mean, you struggle to find. So it's obviously going to be those non-tech components of the Qs that are going to hold it up. But, even non-tech stuff is getting hit to a certain extent today. The only thing up substantially is the banks. We know there's a complete inverse correlation between banks and tech right now. Every single day, it's the same thing. If tech's way down, banks are way up. All linked to the TLT. TLT is going down. The banks are getting a little bit of lift off of that. But it's a difficult market to trade. I call it. I thought we were going to roll over.
Yeah.
And my overnight portfolio. I guess you just go short. You don't put any longs in there at all.
Why did you usually fade Kathy stocks?
Because some of them were down so much last night. Like some of them were down significantly. I'm like, okay, well, Qs are up, and you got Roku trading down 1.5%. I'm like, okay, well, there seems to be an edge there because it's not short quite many Qs against it. It didn't make up for it. Overall, I'm probably going to, I don't think I'm going to lose money here on my overnight, but I'm not going to make much. And it kind of pisses you off when you call the rollover. And you screw it up. I mean, and people say, why would you not just short when they don't understand hedging and the tactics and stuff? I just don't go short a bazillion dollars worth of Qs and, not hedge it somehow. So, I see opportunities, different opportunities. I go in and I go out. That's how, I kind of roll. So, I'm always hedged. I trade market neutral. I wasn't trading market neutral. I was actually trading to the short side last night, but it's not making up for it. The biggest issue is SPY. I mean, you can say the S&P's rolled over 20 handles, but there are so many stocks just hammered today, and the S&P is down 0.38%. Feels like a joke. It feels like it's not even replicating the market whatsoever. But, there's some banks in there that are helping the cause. There'll be some other things helping the cause. The rotation within itself helps the cause. Some consumer staples will probably help the cause. Coca-Cola trading in the green. So it's tech, and then it's the other stuff. And that's what we see here again this morning.
What's interesting, I mean, is the day that, tech was the leader, yesterday, and the market still ended up red. And then that was just like a one-day phenomenon. Now that all of it's rolling over again today. So I don't know. Pump and Powell. You think Pump and Powell can
might help something? We'll see. I still think you just can't chase. I mean, we said on yesterday's show and we're trading up and NASDAQ's at 322. And I'm like, people are asking, are you buying tech? You're buying Qs here. No. You're buying the rip. If you're buying Qs, yesterday you were buying the 6-day rip. We were up substantially. So we're correcting. We're still not in trouble here. I mean, we bounced out those lows at 300. So I'm not throwing in the towel and saying the tech party is over. But, we got to correct a little bit here. So now, do you come in here and buy some tech stocks? Maybe if you want to. It depends on your exposure. Like I said, I've been lightening up my exposure into all rallies. I was lightening up. I sold 2 or 3 tech stocks again yesterday, and I can't remember. A couple SPACs I sold. I mean, the SPACs have just been disastrous for the most part. I mean, CCIV gets the Kramer pump yesterday, and I see all my, my Twitter feed. It's a breakout for CCIV. And I'm thinking, well, yeah, you can say it's a breakout, but this is all because of Kramer. It's going to be on mad money, and does it give it back? And I mean, it gives it back immediately here. So, these aren't real breakouts. When you got to almost analyze, this is why just using a chart doesn't tell you the whole story. The CCIV was up yesterday because Jim Cramer said he was going to have Lucid on. That was the only reason. So is that, and we've seen these Kramer pops as of late get faded. We've seen the Cathy pops as of late get faded. Again, that was a great opportunity. The thing went to $33 yesterday. It's down at 28. So immediately faded. It's right back down to where it was. So you got to fade. You got to be willing to fade these moves.
When you see, you're looking to the left of the chart here, and when you broke out, what was this 35 right here? That's a whole different ball game. When you're buying this breakout over 35 in February, right? But this time around, it's different. It's a lot different because is this when the deal got announced and it went from 60 to 45? You got a lot of people that want their money back in this. It's different. Here, everyone was winner, chicken dinner, right?
Yeah.
And now it's like, man, I can't believe I bought this at 58, and here it is. So I still trading near the lows, 28.50. What did you have here? I mean, a lot of these charts look the same. They got off the bottom. You went from 20 to 33, so maybe 26 and a half, 27. I see a pair of low. I see one low at 27.03. So keep an eye on that. That's your 2-day low. And then if they really take this out to the woodshed, there's a pair of lows just at 25. But what I think the stock of the day is, man, Plug Power, Dennis.
Yeah.
Holy mackerel.
Accounting.
Give us accounting. There's one thing you can't do on Wall Street.
Never.
You can't
Not in any
have
market.
accounting issues.
That's exactly what I was going to say. The market
can't have accounting
The market
issues.
is always changing, but some things never change. And if you report accounting problems, you're going to have a bad time. Here is what Plug Power said. I'll read directly from the release out at like 5 o'clock yesterday. The audit determined the company's previously issued financial statements as of and for the years ended December 31st, 2019 and 2018, and as of and for each of the quarterly periods ending from March 31st, 2020 and 2019, June 30th, 2020 and 2019, September 30th, 2020 and 2019, basically the last 2 years of financial statements should no longer be relied upon due to errors in accounting primarily related to, and then they listed through a bunch of factors, but that's basically the gist of it.
Was it the Amazon deal? Did that have anything to do with it? That was a funky deal they did with Amazon. I don't know. Yeah. I don't know what to say about this.
It's difficult, Joel, and Spencer. It's difficult, and listeners, to come in and buy stocks when you can't rely on the numbers.
Yeah.
I mean, this is why accounting issues. This is like, the root of all fundamental analysis is based on the numbers. And they tell you your last 2 years of your numbers are no good.
2 years.
Your numbers are no good. So, okay, you can read through whatever you want. Maybe it's just a minor issue, but that spooks the market always. They don't read. We know this market doesn't read and get into the details. This market looks at the headline. Headline says we can't rely on the numbers. They're going to hammer the stock. I like this one better than Fuel Cell and Ballard Power. I said yesterday. I said I wouldn't buy any of them, but if I was buying one, it would have been Plug Power. That would have been the wrong one.
Oh, and the reason this was out yesterday specifically is because they were supposed to report earnings for the December quarter, and they said, well, that's not going to happen, obviously. So we're going to finalize and restate all the statements for all these periods as soon as practical, whenever that is. So TBD on financial statements.
I don't know what to tell you, man, on this one.
Well, they've all had huge runs too. So, now you start looking Plug Power. Again, we talk about the huge runs. 2015, this was $2. 2016, this was $2. 2017, it was $2. 2018, it was $2. 2019, it was $2. Beginning of 2020, this was a $2 stock. It was a $2 stock for basically a decade. And then all of a sudden, they decide, nope, this is the future, even though the stock's been out there for 20 years and they rip it to 70. Is this the future or isn't it? I mean, we're at the crossroads here. So I don't know if you're looking Fuel Cell, Ballard Power, and Plug. These have been dogs forever. Everything, all these techs, everything tech, even the old school growth techs and the old school legacy ones like Plug Power, that were supposed to be the future back in 1999, have all come ripping back on the back half of 2020 and in the early part of 2021. Well, the rug has been pulled out from under these things. But, you look at the all-time high. Yeah, it was up at $1,500 back in the year 2000. $36 here now. It's hard. You're still in territory. Yeah. Could you go back to $2? It's possible. I'm not saying it's going there.
I have no idea where this thing is.
It's possible. It was $2 for a better part of a decade. Was this all just fluff and BS? It's possible. But it's also possible that they do have a business now. And it's also possible that maybe it consolidated $2 for a long time. Maybe eventually it is worth a little bit more. But coming in and saying Plug Power at $35 is a no-brainer. It's not a no-brainer, because if it gets back to where it wanted to be always in 2018, 2019, it's got a long ways down. But, if you think fuel cell technology is the future, I don't know if Musk is in that camp, but if you think it is, then maybe you're buying the dip. I am not. I don't own any of these.
I'm not. No, I've never owned any of these. Fuel Cell getting hit on this as well. I'll just give you guys the pre-market low, and I'll try and what I try and do in this instance is I'd see what the pre-market low is, and that comes in at 32.80, and then I scrounge around and I try and find some. You got some gaps to fill. Well, they're going to get filled today. And I try and find a daily low, and I don't have much. So I would call a potential buy zone today, if you really want to be patient, 30.40 to 33.72. Now, is it going to get that low? I don't know, but that's the only thing the dailies have for you. And you got a little bit of a rally going right now.
It might bounce back. It's hard to say, but it doesn't. Accounting issues, I lay off. I always lay off when there's accounting issues. I agree with Jim Cramer. Says accounting issues equals sell. It's going to be interesting. He never addressed this last night. I actually tweeted at him just asking because he's been pumping Plug Power's tires here for the better part of a year, and now they got accounting issues. So is he going to change his tune, or is he going to shrug this off? Because he's always told us accounting issues equal sell. Does it hold when it's one of your darlings? Because it's the Jim Cramer darling. I don't know. I'm hoping he's going to address it.
And this is not to say that stocks that are dogs for years can't become darlings. I mean,
they can.
You could have bought AMD.
It did.
You could have bought AMD for $1 6 years ago, right? So sometimes the comeback really is real.
Yeah.
Right.
Yeah. For sure.
It's just you don't know. You don't know, unfortunately.
Nobody knows anything.
No one knows.
So we just play percentages. We play the odds. That's all we can do. On any given day, nobody really knows anything. Nobody ever knows.
We got a little rally going, 5 points off the low. So we did get a little bit.
The S&P suck. I'm just going to say right now that the S&Ps are so not indicative of what this market's about. I mean, you can say, but it is so much rotation going on in the S&Ps that keep continuing to keep it up. So I guess, as an investment, it's awesome because the SPY just doesn't go down. The biggest portion of my long-term portfolio is in SPY, so I'm happy for that. But to try to look at the SPY on any given day and tell you what the market is doing is just not the case. And Joel's going to hate this as an S&P futures trader, but I'm telling you, man, you're looking at this S&P's down 10 handles. There is a whipping in the growth names. Like a Kathy stocks are getting whipped here again this morning.
Like what do we got?
Down to the tune of 3%, most of them. So down 0.3% it's down 10% of what the Kathy stocks are down right now. So Tesla down. Just any tech stocks. Square is down 3%. Tesla's down 3%. Anything growth is down 3% plus.
While you're saying that, Dennis, I literally just sold a Kathy stock.
What'd you sell?
Kappa. She's been in this one. I was up about 10% yesterday and lost it all yesterday. So I just took like a 1% gain right there just to take it off the table because it was coming back down.
Keep lightening up growth. I'm just concerned. I'm
concerned too.
Yeah, I'm just concerned that the growth names, I think you're going to get rotation. I don't think the S&Ps they're at all-time highs. We're not saying the market is in trouble. The market's rotation continues to help it. But like I said last week, I don't think it's one thing to have value coming back into favor for a couple of days or a couple of weeks. Value has been back in favor now for the better part of 3 months.
Six months, I would say. This
is a long time now. A long time. And with the Reddit revolution, where I've said this before, as they seem to all go and look at, they are analyzing over there. They aren't just grabbing anything. They're buying value stocks. If you look at the types of stocks that they're continuing to buy, yes, there's a few other ones like Palantir in there. But if you look, GameStop wasn't a growth tech stock. It was a value play, deep value, roaring kitty.
Deep effing value.
This whole market, this value, and we see these waves in 2001 to 2008. Growth and tech massively underperformed value. Why? Because we had a big tech bubble burst and everybody jumped into value.
ExxonMobil was the king.
8 years.
Yeah, Exxon was the king.
Yeah. So the question is, are we 3 months into a new decade period of value? We could be. I don't know. But all I know is my portfolio has been allocated to tech for a long time. So I've been trading in tech stocks and buying some other types of value stocks. I put Bristol Myers in the long-term portfolio yesterday. I traded in some tech name. I can't even remember. But I've been trading in tech and I've been buying stocks that are, value names for the most part. But stocks with lower PE multiples. So I think you just gotta keep reallocating. If you're all in growth and saying, no, it's all going to come back, it always comes back. It's still periods of cycles, like longer term periods. And I don't know that we're not entering one of those longer term periods where the valuations are just a joke. I mean, all these Kathy stocks, the valuations are so extreme. They're never going to make sense from a value perspective. I mean, buying Airbnb at whatever the hell it's trading at. It's got the growth, so you can jump in and say, oh, yeah, it's a great stock. But, I mean, growth, if it stays out of favor for a while and multiples start to come in, there could be some serious rotation. So I just telling people out there, if you're all tech and all growth and saying, well, it always comes back, look at the period from 2001 to 2009. It doesn't have to do that. You got to look further. So I'm saying just a reallocation is what I've been doing. And not getting out, just reallocating some.
if I can make everyone a little bit less afraid, if your time horizon is really longer, then don't worry about it because eventually it'll come back. It always comes back. It might take a decade.
Well, that's not true, though, Spencer. That's not true, and we can make everybody. But there is probably from 1999 to 2000 in the tech bubble burst.
Yeah,
there are probably thousands of stocks that did not come back and never came back.
That's true.
So you've got to be, when you're putting something in a long-term portfolio, I'm going to say it again, you've got to be cognizant of valuation to a certain extent. If your long-term time horizon is 20 years and you're buying and you're paying 70 times sales for Zoom, that's 70 years of sales. Yes, Zoom can go up a lot. Yes, Zoom can, increase the sales. And yes, maybe it is we're all going to just be doing Zoom. We're going to get rid of mobile phones. We're just going to have, the headsets and Zoom. Maybe that's going to be the case, but maybe it's not going to be the case. So there's a reason that Zoom has been underperforming the market for the last 3 to 4 months. It's because the valuation got absolutely ridiculous. Was it a good stock at $50? Sure. At $100, getting expensive. At $150, ridiculously expensive. At $588, it was an absolute joke. An absolute joke. So at $335, I think it's still a joke. The valuation is a joke. Can the story get hot again? And can the growth go? Yes, it can. So we don't know the path. Maybe the story gets hot. Maybe we go to growth. Maybe, with this free money out there, everything's just going to trade 70 times sales. Nobody knows. But all I know is when I'm buying a stock that's got, a solid, track record, a solid dividend. It's got, a little bit of growth. Even Facebook, paying 19 times with all its businesses. It's a lot more reasonable investment than going and buying Zoom and saying it's going to come back because it always comes back. They don't always come back.
Obviously, all right, I was being a little facetious. Right, they don't always come back. That's definitely true.
You've got to be cognizant of valuation when you're long-term investing.
I've always had this boring stuff.
When you're trading, you can do whatever you want. I trade everything. I buy Zoom every day almost. I'm trading Zoom. Buy, sell, buy, sell.
Buy the dip on plug.
But Zoom has never, I did last night, but I've already sold it. But Zoom will never enter my long-term investment portfolio. Never. Why? Because I went through 1999, 2000, and I saw, what can occur when growth comes out of favor and there's no value investors to buy. So unless Zoom reinvents the entire business and comes up with all new models, I can't pay 50 or 60 times sales for a stock. It makes no sense.
Quick question here from James. I think I know the answer. Triple D, do these accounting issues dissuade you from trading plug in a pair? And I know you've mentioned pair trading plug with some other things. I would say, yeah. I mean, the correlation now, whatever correlations it's had until this accounting thing shakes up, I don't know.
I sympathy off of it. I tried a short fuel cell last night. It had a tick issue. I don't know if it must have dropped 10% or something. I think it was. I don't know if it did. I'm pretty sure. The day before, I couldn't get the tick. So because of the short sell, so I couldn't get it. And then everybody's here getting on the offer trying to get short. Can't get the ticks. I did get short Ballard Power. So on that headline, I shorted Ballard Power flat at 25.70. So I do trade on. I didn't buy the plug against it. I just simply shorted the Ballard saying it's going to come in. It came in like a minute or 2 minutes. It came in fairly quickly. Maybe not 2 minutes. I was in the trade for a little bit, but I'm already out of it. So I shorted Ballard Power on the sympathy play, which is the relationship-based to plug. Ballard Power didn't do anything wrong. Say accounting issues, but there's going to be people that are going to hammer
sympathy.
It. If plug's down 16%, Ballard and fuel cell probably going to be down. So they were down last night before when the Qs were even up. They didn't care, obviously, because plug power is going down. So I did trade. I traded Ballard, tried to get the fuel cell, couldn't get the tick.
All right. A couple people are asking about what time is the Fed today. The announcement is always the same. It's always the same time. The announcement is at 2 o'clock Eastern time, 2 p.m. is when the decision comes out, and then there's a press conference at 2:30, and that's when people get to ask Powell, and that's really when the market will move at 2, and then it may do nothing for a little bit, and then at 2:30 when he starts speaking, it'll move. It might move again. So 2 o'clock and 2:30 Eastern are your times. We don't expect they'll do anything different. We expect them to really the only question is, what are they going to say? Like, are they going to say we may raise rates in 2 years or in 3 years, like, or longer? Like, that's really the question. Like, they're not going to raise rates. They've talked about that. They're just going to say the same thing. It's really just a question of like our expectations for the future. Have they changed or have they not changed? And we'll find out at 2:00. But that's what the Fed situation is for today. Could move the bond market, TLT, futures, and that's pretty much maybe the banks. We also got a question for the past couple of days, I think. Joel,
Sure.
Can you explain exactly what a quad witch is? I'm sure a lot of people listeners know, and I'm sure some of them don't. So Friday is going to be a very interesting day. One, because it's an S&P rebalance.
Yep.
And two, because three reasons actually. Two, because it's the first day of March Madness, and three, it is a quad witch. Joel, can you explain?
Sure.
What is a quad witch?
All right. Well, in the old days, back when Dennis and I it used to be a triple witch, and so I'm just going to give you the most insignificant part of the quad witch, and those are single stock futures. They just never took off. I believe one of the Chicago Stock Exchange tried it. I've talked to Rob Friesen about it. He said there was just no edge, no liquidity. The only person I know that used them is Jerry Parker from Chesapeake Capital. So let's take out the single stock futures. Dennis, I'm sure you've never traded. So if it's not a quad witch, it's a triple witch. And it happens the third Friday of every calendar quarter, March, June, September, and December. And that is when you have the simultaneous expiration of the following instruments. You have stock index options,
Like
stock indexes, and options on individual stocks. And there are a lot of turning points, and there's a lot of things. And that's when Dennis and we text last night, last March you had the gamma unwind. I'm not exactly sure what that is, but I think one thing that there's going to be a wild expiration. I don't know which way it's going to go, but there's a lot of stuff coming off the board. So it's more volatile trading. Dennis, I know people asked you about how you do it, and you just kind of sit back and wait and fade it, right?
I fade the 350 to 4. I fade the 4 o'clock closes. If they're getting gaps up this way, I'm selling the gap ups and I'm buying the gap downs. I'm buying the dips and selling the rips right on the 4 o'clock close.
And is that
I do that
algorithmically
strategy? Too?
Yeah. Is that? I mean, you do adjust that though, like over the years. I know you've been doing it. Yeah.
You trade it. I always pull for news. If there's a newsy stock coming or something's trading on a lot. Yep. Yeah, I pull those out of my spreadsheets. So, but I've always faded the moves, just providing liquidity. That's classic Don Bright. Rest in peace, Don Bright. So many good strategies came from you. I know there's some listeners that probably know Don out there as well. That's Don Bright creativity right there. That from back, in the 90s. We fade those big institutional moves. We fade those. And you know what? That strategy still hold water.
They come in. Sometimes they come in immediately. Sometimes they just come in within seconds.
Yeah, you don't get the huge gaps you used to. It doesn't seem like. Sometimes you can, I guess. There has been some big ones. There was one like 2 or 3 years ago, an option expiration on a quad witch, and it was a whole pile of stocks. Like there was like Johnson gapped up $2 on the closing print. I shorted that and immediately made $1. UNH, I think, gapped down. I don't know if some of the traders out there, the prop traders, if they're listening, probably can remember, but I think it was UNH when it was like, I'm going back like 2018. So UNH was maybe like a $200 stock. I think it gapped down like $10 or something on the closing print, or $8.
There's some big ones. Yeah.
Yeah. Those are like gifts. So, all of a sudden stocks trading like here and boom, they're here and boom, they're here. Well, I want to be a buyer down here. I don't want to be a seller down here. It's not rocket science. So, so how I play that, I've talked about this before. I use the LOC, limit on close. I got, stocks are trading here. I surround the fair value going out a little ways there. But, I use LOC, a limit on close. That's going to execute me on the closing print or cancel. So my offers here, let's say, Johnson & Johnson's trading, let's just bring up the price right now, hypothetical situations, trade at 161.5. Well, maybe I'm throwing out a 162 short or a 162.5 short. If it closes at 163, I get short at 163. I don't get 160.
Multiple orders too.
Yeah, I'll throw out multiple orders out there too sometimes if I really think it's really going to go. You can do a couple of different levels. You could throw one out, and sometimes it depends on how aggressive you want to be. Sometimes you go 0.5%, you go 1%. Maybe you're not a very aggressive trader. Maybe you want to go 1.5%. You start to go within 0.5%, then it starts to get dicey. Market could move on you. I mean, there's so I think you're staying out over 0.5%. But again, people that are listening are, what are you going into a trade for 0.5%? Well, you get 50 stocks on 0.5%. You just made a lot of money. So, I mean, this is basic market making at the close is what it is. So this is how I trade. I'll enter a trade for a 0.1% edge. If I have a 0.1% quantitative edge, I will enter that trade.
And we probably don't have time. We'll another time. The old, was it the Russell rebalance story when you forgot to turn off your algorithm?
No.
And you were going to Europe the next
I was going
day.
on the European vacation. I was like, we might not be able to go on the European vacation. I got executed on the Russell rebalance. I got 200 stocks in about 2 seconds and with size. And I'm like, holy cow. I was trying to work out. And it was interesting anyway. So I ended up getting about half a mil, and then I hedged it all with SPY and went on vacation. I traded out from London.
That's the answer. Just hedge it with SPY, buy SPY, sell SPY, and call
SPY
it.
hedge isn't working in this market. I'm with SPY and Qs right now, and I got a couple tech longs like Roku, and I'm just destroyed on them.
Well, it was the thing, and we'll move on. We'll do some earnings after this. But you didn't turn off your algo, so
it was still running, in the background.
So you would sell a stock, and then you would be like, "Wow, I just sold this stock," and then it would be long again.
I don't know how it came back in my portfolio, but the algorithm's still buying. So I mean, this is one thing to algorithmic traders out there. Again, this is the first thing. It should be on page 1 of my algorithmic trading book. Is when you're developing your own programs, and I literally developed the software from scratch. I had 4 programmers developing it from scratch. Lots of money in that stuff. Believe me, lots of money to pay and that kind of stuff. Never put a minimize button on your program. So I had the little they put a minimize button so I can have more screen room and it can just run in the background. So the minimize, so I had the program minimized in the corner. And I'm like, how am I still buying stocks? I'm like, what's going on? And I'm like, oh my, it's running in the background right now. It's literally running in the background because I've got the program minimized. It's still running. I didn't shut it down. So, algorithmic traders, don't put a minimize button on your algorithmic programs to save screen.
Well, as usual, Dennis's pain is our entertainment. So, moving right along, let's go to.
I know you're such a good sport.
Good stories.
Yeah.
All right,
you're actually the funniest. I kind of hope you have losing days because that's when you're the funniest. Is when you have losing.
I'm having a losing day today. I'm pretty sure it can be the second one of the year. I'm buried right now.
How's
bearish coming in? How's this happen?
Hedging, man.
I lose money. All right, man, I'm dumb.
Earnings. Let's do a couple of earnings.
A couple, and then we'll have Corpina on in 2 minutes. Let's start with CrowdStrike, CRWD. They gave a lot of guidance last night. So their Q4 EPS beat the estimate. Their Q4 sales number beat the estimate. Their Q1 guidance for EPS beat. Q1 sales guidance beat. Fiscal year EPS guidance beat. Fiscal year sales guidance beat. Everything beat for CrowdStrike last night. And
doing well last night until they pulled the tech bubble carpet out. They pulled the rug out from underneath it.
Who was listening to the afternoon show yesterday? Because I was as about convicted as I could be about this 209 to 210 area.
Good level,
You remember that, Spencer?
Yeah.
Because we had 3 highs at that area. The 50% is right at that area. You got people crushed on the way down here. You had people that bought the dip at 170. And I don't know if any. I hope someone got. I did not participate in this, but I mean that 210. That was a gift from the market gods. I mean, holy moly! They marched it up, almost got to 212, right? So you're splitting hairs, But now it's 199.50. Yikes! You might not be seeing that 210 for a while. We're on the downside here. Let's just look at yesterday's range. Yesterday's low 193.50. I don't know if you're going to see that. And the close is right in below it too, with 196.31. So keep an eye on that. Make sure it doesn't go red on you. That's for CrowdStrike. What else did we have?
We'll do one more, and then I'm going to give Jonathan Corpina a call. I'm going to call him in the background, so I'll do that while Joel.
Okay.
What do you got?
You want to do Lennar? I mean, there's a few.
Lennar, did it pop and drop?
We can go to Kodak.
Yeah, it did.
Let's
I actually traded the Kodak.
All right. Let's do Kodak because that one's more fun.
Yeah,
Lennar was boring. Kodak, I don't even know how to interpret the numbers. They just here.
Either did they.
Yeah, I mean here they filed for a mixed shelf offering of up to $500 million. They're going to sell up to 44.5, or it's from 44.5 million shares from a selling shareholder. Yeah, I'll just give you like they had operating EBITDA loss of $1 million last quarter or last year. I don't know. Talk about your trading in Kodak.
I actually had a long position in this that I bought because somebody said, "Oh, it's an NFT play," and I'm like, "Okay, well, maybe this could get a little bit of life." I bought it a couple days ago, and it actually was showing some life 2 days ago. It went up to 1050. That's weird.
Oops, sorry.
Joel, you got to put that thing on vibrate.
I know.
Silent mode now. Thank you. So anyways, I bought it a couple days ago.
I mean, I told Jerome not to call me between 8 and 9, and he does it every time.
Joel. My phone rings. Joel, my phone rings continuously.
All right, Joel, I'm going to interrupt you guys. I'm going to interrupt you guys. I've got Jonathan Corpina here.
Okay, we'll
Senior Managing Partner at Meridian Equity Partners, joining us via phone from the floor of the New York Stock Exchange. Jonathan, good morning.
Gentlemen, good morning. Nice to be on.
Nice to be on with you. So you're back on the floor. Everything is back to normal.
Back to normal. Wow, that's I don't know if we can ever pinpoint that ever again. Yeah, so we've been back on the floor. Obviously, as you guys know, floor's been open since May 25th, I think.
Right.
And we've been operating with a scaled down staff. So we're operating at about 50% as per the NYSE guidelines. And we continue to operate like that. Everyone's, we're here every day, but we do rotating shifts. So we've got, our traders here on the floor, and when they're not on the floor, they're working from home like the rest of the world.
Makes sense. All right, Jonathan, let's just start with Fed, start with Powell. What are your expectations for today as far as how, not what he's going to say, but how the market will react to what he says or doesn't say?
I think the market continues to be fragile. With the volatility that we've seen both up and down, I think is unhealthy for our markets. And I think we need to continue to tighten in those upper bands and lower bands to try to build a range and build a base here. Yes, we hear from the Fed today. Are they going to say anything that's off script or anything that we haven't really heard before or aren't expecting? I don't. I think they're going to go right down the middle and keep things as safe as possible. How does the market react to that? That's going to be interesting, right? We've seen big swings in our market. We've been watching the 10-year. VIX gets below 20 and bounces right back up again. I think it's going to be rough trading for the next 1 or 2 days because I just think the fear in this market is certainly there. We continue to trade near or close to highs. S&P, Dow. Russell's had some significant moves to it. NASDAQ, we're seeing tremendous pressure on that due to the inverse relation to the 10-year. So I think we're going to continue to see this uncertainty. Couple that with what's going on in Europe tied to coronavirus, and the progression that we were seeing there has now reversed, and we're seeing countries go somewhat backwards in some stances there. Yet in the United States, we continue to grow and expand and reopen. And it's only going to take a matter of time for us to realize how this reopening process is going to be impactful on a positive basis or a negative basis on our economy. So I think the uneasiness is certainly still there. This Fed conversation today is going to be somewhat benign in my opinion.
I mean, rates are going no. I mean, everyone's talking about rates going up, but I mean, and they're trying to force the Fed's hand, but I mean, what's up? Like, rates are never going back to the levels that where you're going to pull your money. I don't say never, but the people are going to pull their money out of the market to go into interest bearing. I mean, I don't know what the hubbub is about. It's just we're not going this inflation that there's inflation in certain things, right?
Sorry, I'm not sure if Jonathan heard what you were saying, Joel. So I'm just going to repeat what.
I did not. I'm sorry.
No,
why not?
I think our connection just dropped off, but I got him back. I'm not positive here. This is our first time using the phone with StreamYard, so I tested it out, but we may have some glitches. I'm just going to repeat what Joel was saying so he can hear me. But Joel's point was interest rates aren't going up anytime soon, right? So really, I mean, what difference does it make? I think is the point Joel was trying to make. But Jonathan, I have a question for you. What are your client? What is the tone from your clients right now? You're on the phone with clients all day, and are they worried? Are they not? Are they like buying the dip in tech, or like what is the sentiment from them?
Yeah, I think the overall sentiment is happy the market is, in some indices are trading near or at all-time highs, but certainly there's an apprehension that the next shoe is going to drop in some place, and they're playing that protection side. The volatility that we're seeing in tech could certainly translate over to some other sectors in time on a rotational basis. We're seeing value be put into play at this point. Still early in the Biden administration. Coronavirus, vaccinations. We're getting comments out of North Korea as to how our relation should be. China's not happy. There's so many factors that are out there that I think could put pressure on this market. And I feel like in conversations with my clients, they too are waiting for just the next catalyst. Unfortunately, I think the overall feelings of the catalyst might be to the downside.
Question from our chat to get your thoughts on GameStop here on that hullabaloo. Do you have any? Do you have any thoughts on that?
Yeah, absolutely. So I think a lot of people are going to be watching the hearings today. We've got round two of them.
Yep.
So they'll be broadcast everywhere. Great lineup that they have today, and I think it's going to be refreshing to hear different perspectives to it. Listen, I think what we're seeing here is clearly masses getting in and out of stocks simultaneously. And what we've seen over time, and I believe we've spoken about this, is with our shutdown and our lockdown, the increase in retail new accounts coming in and retail order flow and retail participation has skyrocketed. And a kind of interesting little anecdote, I have two daughters that go to school down in Texas, and I went down and visit them. And, took their friends out to lunch and took their friends out to dinner. And all these kids were talking about GameStop and Bitcoin. Those are the two things that they wanted to talk about, cryptocurrencies and GME. And it's amazing how, 18, 19, 20-year-olds are so fascinated and drawn into what is going on and what's happening. And that just shows me and solidifies to me that if these kids are talking about it and if these kids are participating in it, then the other tens of thousands, millions of people are looking at the same thing. And it's the herd effect. We've got herd effect getting in and herd effect getting out. These hearings are going to be interesting because I think they're not, they're going to focus on, two things. One is payment for order flow and the effects of that on the market. And the other one is going to be the Reddit concept, right? The concept of message boards and message communities, and how that can influence people's instincts to buy or sell a stock. And listen, I equate it to you go to your you go to your barber and you're sitting in the chair and your barber goes, oh, I heard about this great stock. One of my other clients told me to buy XYZ. So you then go and buy XYZ. You didn't do any research. You don't know the fundamentals. You probably have a very minimal understanding of what they do, but you go and buy it. And that's no different than what happened in Reddit, right? They were posting messages of go buy GME, go buy Best Buy, Bed Bath & Beyond. These different messages that were coming through. I don't think people were posting falsified information about revenues and earnings and expectations and M&A activity. The messages were strictly, you should be owning this. So it's going to be interesting to see how they try to corral that freedom of speech. But we certainly have seen the effects on the markets. We continue to watch how these stocks swing, and most of the time we're only hearing the good stories about it, right? For every trade, there's a buyer and a seller.
Yep.
That was my message to those college kids down in Texas, that, listen, you hear all these great windfall stories of people who bought it low and sold it very, very high. There's always somebody on the other side of that trade, so you got to be really careful of what you do and how you do it.
Great point. Jonathan, one more here before we let you go. You mentioned tech as it relates to the bond yields. What leads what? What leads the relationship? Or is it the bonds leading, and as bonds go up, tech goes down, or is it as tech goes down, bonds go up?
I think bonds leading the momentum in tech, right? I mean, the 10-year trading, the 10-year trading at sub levels offers not only tech, but many companies out there just low interest rates for long-term cash, and that money could be is put to use very quickly in a very expanded point of view. I think as tech has been very exposed to that and very exposed to the debt, that when we see the yields move higher, that's when the tech gets the ripple effects of that. So I do think it's the bond that's leading all of this.
Jonathan, before we let you go, Dennis we've talked about in depth the transaction tax. Do you see that getting any legs on Wall Street? I mean,
Jonathan,
Yeah.
you heard Joel?
No, I didn't hear Joel. I can only hear you.
Right. Yeah, I don't know why that's working. I apologize. So Joel was asking you about the financial transaction tax. Do you have expectations for that? Do you think it could go through? I guess how likely is that to happen?
Yeah. So listen, that's a DC. That's DC who's running the lead here on that. I think clearly they're going to see some pretty strong opposition. What we are seeing at this point is that exchanges and institutions are flexing their muscles back and saying, listen, you guys do what you want to do, but this is going to be our reaction. So the ball keeps getting lobbed over the net and back and forth into other people's laps. Right now, I think the ball's in DC's laps, as we've seen that NYSE came out with a statement saying we, in fact, will move to a different location and where we can operate without these types of transaction tax. That too is going to take a lot of time to play out. Just the thought of the New York Stock Exchanges and Nasdaqs and the Virtus and Citadels, and how do they operate in that environment, and what's their solution? It's a mammoth undertaking. I do think that we'll have a lot of posturing going back and forth, but at the end of the day, there's going to have to be some sort of resolution, because the ripple effects of that is just tremendous. Think about the real estate around the New York Stock Exchange and people who live here and businesses. It goes beyond just this transaction tax. Yep. So I think smarter heads will prevail on something like this.
Jonathan Corpina is a senior managing partner at Meridian Equity Partners, joining us from the floor of the NYSE. Jonathan, we appreciate your time. Thanks a lot.
Gentlemen, have a great day. Thank you for your time.
All right. Next time, guys, I'll make sure we use our first time ever using a phone with this streaming service we use, and next time we'll get it so that he can actually hear you as well as me. But I apologize for that, Joel and Dennis. But
don't worry about it, Spencer.
We're able to get to hear from him. Okay, I see a debate in chat about NFTs. It's good that that's going on, because our guest at 9, Jonathan Goldbronson, or John G, as we call him, from Benzinga, will be able to explain all of this NFT madness, how it runs on the Ethereum network, what that even means, how it's different from Bitcoin, and all of that in about 10 minutes or so. What else was on our list here? We could go to Uber.
We were talking about Kodak.
We're talking about Kodak, and I interrupted you. I'm sorry.
That was the NFTs for Jonathan. That was great, though. So I had Kodak. I bought it just a few days ago. It's funny. I just we actually had mentioned it a couple of days ago. I didn't comment on it because I actually had bought it. It had a pretty good pop. It had a pretty good pop up to 1050. I thought, well, maybe this is going to be, an under, the radar, NFT play, because the universe been talking about this as a potential NFT play. So I was like, oh, maybe. Anyways, with yesterday's candle, I was like, no, this thing's in trouble. And I knew it was going to report earnings, and I'm like, any earnings pop, I'm getting the hell out of this. So I was like looking at this, and I'm like, I'm going to get out on any earnings pop. It didn't just give me a little earnings pop. It ripped higher. Bring up that Kodak chart after hours. It went over $10.
Ooh.
So I actually got out at 980. So
Nice.
I actually got out of my stock at 980 on the pop. So I'm out of Kodak now. The simple reason is that I felt like tech was turned yesterday. So I was trying to lighten up all tech stocks. I'm like, any tech stock that I own, it's going to be rallying into it. I'm going to get out. Not that Kodak's a tech stock, but it's like that Momo, Hope name, it's the kind of name that's going to get hammered. And if we go into a risk off environment to a certain extent. So anyways, I still think it could be an under the radar NFT play, but I sold the rip. If it gets back down that 7 area, maybe I jump back in, but I don't know. This is just a storied stock. This is complete speculation. So I have no position in it now again.
Did you catch that 980 on the way up or on the way down?
On the way up.
Yeah,
I saw the strength. Yeah,
okay,
I thought it might pop up, and I was like, oh, it's gonna stall out. I had it in my head that it'd stall out around $10 if it really got there. So I was ahead of it. I had the order already out there, so I got lifted on the way up into the earnings report. And it was a couple minutes later. It ripped, and then it dipped a little bit, and I was like, am I gonna have to bring that down? And then it started really getting the life. I don't know, if they read more details or whatever, but then it started ripping up over 10. So I sold the rip.
Yep. 1008 was the high. This is just a tough stock, traded down. What's yesterday's low? Are we through yesterday's low? Yeah, 871. That's going to be your resistance now. Not much in here. I see an 847 low, and then you look under $8 at 781. But that's what your move is in Kodak.
It's just using an earnings report to get, and when you're in something. Well, yeah, you're in something, you're in trouble. I actually thought about selling it before the earnings, but I kind of thought they might pop it in the earnings report for whatever reason. I don't know why I thought that, but they might give it some love, and I was like, I'm going to use the pop to sell. And then they came out with an offer, and they came out with a lot of bad stuff after that. So I got out at a perfect price. I don't often get that, that you get out, near the top of a after hours move, but just worked out that way. But, sometimes you can use those earnings to get you out of a bad position. That's what I did.
Mitch and I were on the stream. We were watching that pop, and we theorized Dennis is probably selling into this. Hey, we were.
I did.
Into it. Look at that.
I didn't sell it short. I just actually owned the stock, and I was like, I don't like this. Yeah. I don't like taking heat. So as soon as when I enter even a swing trade or a storied stock, I want immediate gratification. I want if the stock story and the momentum is carrying and people are talking about it on Twitter, like Chris Camille says, the social arb stuff, I'll trade. If there's momentum there, I'll trade it with it. But, if it gives it back, it's like, okay, well, momentum just broke. I don't want to be in the thing if the momentum's breaking. So I'm in it from the Momo. I'm not in Kodak on a valuation. It's not a value long-term investment. It was a trade. So I snuck out of it.
All right,
Palantir. They all want to talk Palantir every day. Yeah, we could literally do a Palantir show. Like everybody wants to talk Palantir all the time. So quick thoughts.
Well, it's interesting because the CEO doesn't give too many interviews, and that
was a good interview.
And he was on CNBC at like 3:15, 3 o'clock, somewhere in that. Doesn't give too many of those. So it was interesting to hear him speak. And I was talking to Tom Nash yesterday on our stream, and he's bullish Palantir, and he said something that I thought was funny, and I want to tell you guys. Basically, he was like, well, Palantir, to the best I understand it, and that's how every explanation of Palantir has to start. To the best of my understanding, this is what they do. Because nobody actually understands it. The bulls don't get it, the bears don't get it. Nobody gets it except the people that built the thing for 17 damn years.
Jim Cramer always jokes like that too. We don't really know what they do, but it's got a good story. It was a recent IPO. I mean, we have just, how, like we said before, how many Kathy pops?
Yeah, there's two.
I mean, if you didn't have Kathy Woods, there's an argument to be made that if Kathy Woods wasn't literally buying this and getting all the Kathy pops off of this, that this would be under $20. So it's had so much Kathy love that it's kept the stock floating. I mean, I just think eventually, I don't know. Like, it's a storied stock. Reddit could grab a hold of it. There's some reasons you could see why it could go higher. It's kind of a coin flip here. It's in the middle of nowhere. I just don't know if I don't like the tape when it's, had so much love from Kathy Woods, you can't get off the mat. And everybody wants to talk about it every day. Obviously, everybody owns this thing.
Everyone's stuck.
A
There's
lot of
people stuck on this.
A lot of people
thing.
stuck too.
Yeah.
But this is the market that's bailed out a lot of, bag holders. So, Reddit could bail them out. Reddit likes this stock too. It's talked about on Reddit a lot. So I never want to short a Reddit stock. At the same time, I'm not buying it.
It's thick though. It's really thick. I mean, you're getting a lot of Reddit. Yeah, I mean, it trades like water.
It's as liquid at 7:30 at night when the market's closed. It's got a 2-cent market. I mean, it basically doesn't close. It's trades from 4 a.m. to 4 p.m. and it's thick the whole time. It's impressive, the liquidity in that thing.
Boy, you got down to 2018 on the 5th, right? And then you had about a 7.5 point pop, 3 1/4. That puts you like 23 1/4, 23 1/2, giving back this move. So that's what I'd be looking for on a pullback, a daily low at 23.10. And then, man, I would not get excited about this thing. And I'm just going to target that whole 27 area. Someone was definitely targeting that after the last 4 sessions. 684, 692, and 710. Yeah, you had that 747 high on the 15th. Maybe they just let it go and then they sold it off to close at 26.79. But those are my early parameters. Just a lot of supply in here. And it got hit off earnings, folks. That was the thing. This gap down here was earnings. So you're going to wait for a long time for a catalyst to, the next earnings report. And I don't know. We never talk about analysts anymore, so I don't know if that's going to be the catalyst. They don't do anything anymore.
They do stuff, but it's just not as interesting as everything else. So
yeah. Oh, I just want to point out this Rblx too. I know we talked about it, man. These new stocks, if you're trading these, I mean, you don't have much information, but holy mackerel. I mean, that 77, 78. That was your high, your all-time high. I mean, boom, you got up there yesterday. I believe it got a Kathy boost, right? And got to 78.
Not yesterday, though.
No, 2 days ago.
Not yesterday, 2 days ago?
I'm still, this is the one. If tech turns, this will go to $100. This one's holding up well. It's still got the story going. I wouldn't want to be short this one. So there's lots of other Momo names that have broken. You think, okay, well, Roblox is going to go too. It's very early here yet with Rblx. I think it's going to have a run to 100 yet. I'll actually like the Rblx. I'm not in it because it's valuations, but I might get in it for a trade if it starts to show life. But it is showing life. I mean, it was an awful tape yesterday for a lot of tech names in the afternoon, and Rblx has held up really, really well.
Big value.
So,
yeah.
I don't know. I think this one's eventually. If I was looking to be long a growth name, this would be the one.
Is Spencer too young for this? Where do they start attracting kids? Age? What age? Because I know it's the younger kids, right?
What is I know everybody talks about it. So what exactly is the product? I've never played anything on this.
A little bit too young. It's a platform. It's like a crowdsourced gaming platform. Like you can develop your own game, and then other people can play your game.
Pretty cool.
Like that's the platform. Right.
Yeah.
It's kind of like Minecraft, right? You have your own server, you build your own world. It's kind of like that in a way. It's basically like the platform for people to build their own game and then play that game and then monetize that game.
I called it the Linux of gaming.
What do you think about this one, Mitch? What's your thoughts here on Rblx? I mean, I'm risk off right now, but if I go risk on, it's the first one I'm going to buy.
So long-term story is there for sure.
Yeah.
But the question is the valuation at $76 just way too high?
Yeah, well, it is, but we need the market to turn and that growth story to get hot. Yeah, I think if the market turns and the growth story gets hot, so it's market dependent. My buy of this, I haven't bought it yet. I don't like the Qs right now. I don't like the overall market. I feel like we're still moving away from growth. But if we rotate back into growth, this one's going to lead the charge, in my opinion. So I think, if you see the Qs all of a sudden, turn around on a dime and start ripping higher, if we're making new all-time highs in the Qs, if this is all hypothetical, but if, and I've been bearish Qs. So I'm saying if the Qs go to turn and we start like going through 330 on the Qs, I think Roblox is going to be over $100. So this is the one I want to own if and when the tech market turns.
Okay. A couple quick things. First off, everyone, please smash that like button on YouTube, on Facebook, on Twitter, on Twitch, wherever you're watching this. It's St. Patty's Day. Throw us a like there. Second thing is, as I mentioned, it is St. Patrick's Day. We have a Benzinga Pro sale today. I put the link in the comments. It's also in the description of this video. I'll throw it up in there again. Get 57% off Benzinga Pro today and tomorrow only with this code. And it's back in the chat in the chat one more time. It's also in the description of this video. Third thing is we've been talking about NFTs and what they mean and all that jazz. And I want to bring on our next guest, John G., senior developer at Benzinga. John, is your mic on? Do we work?
I believe so. Can you guys
Hey, we can hear you. What's up, man?
Good morning. Good morning.
All right.
Doing good. How you guys?
I need you to explain NFTs like I'm 5, like I'm a child. Okay. Explain what they are. Well, not so much what they are, but like how they work.
Okay.
So start with that. Start with like I know it runs on the Ethereum network, but I don't really know what that means.
Okay. I'll take a step back, starting with the Ethereum network, just to get some context and how these NFTs actually work on the network. So, and I'll take one further step back to help people understand exactly how this works. So, when Bitcoin launched, it was a very basic network where there's very simple things. It's just a distributed ledger, right? So I think most people hopefully understand that by now. It's been a little over 10 years now. But yeah, so basically the difference between Bitcoin and Ethereum is Ethereum launched what are called smart contracts. And so smart contracts, our simple way to look at it is code on the blockchain. So it allows developers to do more complex things on the network by having more control over like if-else statements and defining functions and allowing you to actually develop on the network. Where Bitcoin is something very simple, where it's move money here, move money there. It's basically very simple functionality. Ethereum launched these smart contracts, which allows you to do this functionality. And there was a number of different improvements to the Ethereum network over time. And so the first one we saw was the ICO boom, where they created this function to basically make tokens. And so the ICOs where you can make, BAT, Link, all these different types of tokens running a smart contract on the Ethereum network. NFTs are basically no different, where it's another type of smart contract where there's functions involved that allow you to build a limited amount of supply of something. Where ERC20, they're fungible tokens where they all represent the same thing. And then the difference between that and the NFTs is there's a limited number of them. And so you can make one NFT or you can make a few of some NFTs, but they're all represented as their own individual digital asset versus the NFTs, or excuse me, the fungible tokens that we saw back in 2017.
Okay, so basically it's a network that allows for more complex functionality, and similar to how we saw like the ICO boom, this is just like the next step in that process, right? Is people just creating non-fungible, again, meaning meaning it's a unique piece of, it's a unique asset, right? It's like not like a bar gold or for example, they're all the same. Non-fungible asset that can be bought and sold on this network. So like for the moment, as far as use cases, all I've really seen is art, right? Are there other use cases that we're not thinking of right now?
Well, yeah. So the use cases, it started with CryptoKitties was the first big one back in the last cycle. And throughout that time, I think there was a few other different NFTs that were created. Cypherpunks was the next kind of big one that happened, I believe, earlier last year. And all these are very basic like attributes that you define to actually create this in this very simple digital art with different attributes. Like, you know, this person has this glasses with this color and very basic attributes. And then yes, the artist kind of came in. I believe like 8 months ago now is probably about the time frame, and representing their actual digital artwork. And now we're getting into songs. And I would not be surprised if we get into things like books. I mean, it's any digital representation, digital file that you can represent on the network as a non-fungible token.
And I guess who decides what has value? But I guess that can be applied to any asset, right? If people decide something has value, then it has value.
Yeah, well, I think one of the most interesting things is, so I'm sure you heard of Justin Blau really getting into this game. He created his NFT where he launched a new album and did a one-of-one of, I believe, the album cover and one of his songs. I think it's called Everything. And basically, what he's been talking about and looking to do is building these into a form of royalty. So he's been working on figuring out the legal ramifications of this and dealing with that. But I think that'll be one of the bigger things if we can figure out, if we get through this phase where an NFT can be something you own, where you earn royalties through that token.
All right.
That'll really change the game in terms of how people can see value on it. But other than that, yes, I mean, it's art ownership.
I don't really know how you feel or felt about like the ICO boom from 2017, but like, to the people that think this is all just a total crapshoot, this is just a stupid stimulus check induced bubble. Is that like where are you on the spectrum? Where are you on the spectrum of this is the future to this is total BS?
Well, I think the thing is there's so much scams out there. I mean, obviously we saw that with the ICO. Anyone with an idea and the ability to find the right spot in the internet to make their token. These technologies are really not that hard to use once you figure it out. Like you go online, there's so much information online. You can find how to do these things relatively easy. So if you can make a website, like we saw in the ICO boom, if you make a website, throw out an idea, you can get people to throw a ton of money at you relatively easy and without much regulation. And so there's a ton of scams that happen from that. But I mean, at the same time, there's a lot of very, very interesting projects that people were building real things on. One of them that was actually really fascinating to me at the time and at the ICO boom was a token called Siacoin. And basically what they were doing is essentially trying to build distributed Amazon Web Services, where it started with file storage, where you can upload your file and pay people to kind of hold it for you. And then people could access that file from like a distributed network.
But so did that work?
I believe it's still running, and they're adding additional functionality. And I'm not actually sure what that project is. I'm just giving an example of something that, like BitTorrent, obviously, it was a very useful protocol for people to download music. This is a similar type protocol where, you can have a file exist everywhere permanently through this network. Granted, this is on the Ethereum network, so it's not going away. But there's definitely interesting applications, and who knows the value of these things? It's hard to. The value is more in the network use than it is like,
So that's a good point. At the very least, is this a bullish argument for Ethereum over other cryptos? At the very least,
the non-fungible tokens, or
the existence of NFTs, is that a bullish case for Ethereum? Like I own Bitcoin. Should I go in and sell some Bitcoin and use that money to buy Ethereum? And obviously, you're not an advisor, so I don't mean literally tell me what.
This is not the financial advice, but I mean, to me, it's definitely this NFTs have been around for a little while now, but I think the fact that it's kind of catching up into the mainstream, and more and more artists are getting into this, I just don't see it stopping. Like I could see this continuing, and the thing is, where I think is most interesting is, well, first, Ethereum has got to scale out. So there's the scalability issue that obviously Bitcoin has, and maybe you can argue that there's really not a scalability issue anymore with how it's played out as a store of value, and people aren't moving the tokens, the coins. But on the Ethereum network, if it scales out, the applications can become almost endless. Where it's a network where it costs very little money to play with it. Where all of a sudden maybe an artist creates 40,000 tickets to a concert that they set up with their friends, with whoever they have, and then they can just tweet it out and say, hey, buy a ticket to my concert, and it costs them a penny to make each non-fungible token.
Yep.
And also for the people to transfer on the network to actually get that token and then sell it peer-to-peer. So like there's like that, to me, that, I mean, I don't know, maybe there's a loop, maybe there's a hole in there you could poke, but to me, that's the kind of the future that's possible with something like NFTs and Ethereum network. And I mean, who knows where this will go? I think the most interesting about this, I think it's kind of funny, is back when there was CryptoKitties, the programmers simply put attributes to build out their CryptoKitties, like make it yellow, make it a little rounder, make it more square, make it skinny, make it fat, like all these different like attributes to like make your cat. And now we have artists coming in here who are like infinitely more creative, I believe, than many programmers. So we'll see where they take this. I think it'll be very interesting to see where this goes. And I think NFTs, and how we're seeing it now play out is just another bullish case for me.
All right, John G's a busy man. I want to let him run. John, we're getting some questions from my chat. Really, a couple of them. One, are you on social media? People want to follow you, and two, where do you learn all this stuff? Like you're a crypto nut. Like, what are you reading, watching, or listening to that where you're learning all about this world?
So I will say, if you want to the first place to start is probably Andreas Antonopoulos as well as Trace Meyer. Andreas Antonopoulos has a bunch of content on YouTube, a bunch of books as well. Trace Meyer has a great podcast. He was actually like a gold bug turned Bitcoiner from his understanding of gold as a market and seeing what Bitcoin could offer for the future. And I think that lays a pretty good foundation for what this networks actually mean. Yeah. And then from there, honestly, just YouTube. There's a lot of YouTubers out there. One I watch in particular, the Crypto Lark. He has a lot of interesting content to help explain a lot of what's happening. And I mean, there's all different types of YouTubers out there. The Defiant is a really good good YouTube and podcast that I found recently that interviews a lot of different people in the space. Okay. But yeah, I mean, it's really, search around YouTube. You can follow me on Twitter. I don't really use Twitter that much. Johnny G170.
Wait, Johnny G170?
Yeah.
All right. I'm gonna. Is it with two N's?
Pardon?
Two N's. Johnny.
Yeah, two N's. Yep.
Johnny G170. I'm putting it in the comments. All right, it's in chat. Johnny G170. All right, John G is a very busy man. He's a senior developer at Benzinga. He understands this stuff to his bones, to his core. John G, thank you so much, man. I know you're busy. You got a lot going on, so thanks for coming on, and we'll have to talk about this more in the future because this is some interesting stuff.
Oh, for sure. Thanks for having me.
All right, thanks so much, John. All right. That's going to be just about a wrap for PreMarket Prep today.